Hi, traders, it's Roberto, and this is another tutorial on price action. Um, so let's get started. Price action is crucial to understanding market sentiment when markets are overbought, oversold. Just by understanding the candlestick patterns, there are 8 major candlestick patterns that you must master in order to trade this way. So here we have a stochastics indicator with settings of 14, 5, and 3, simple moving average. We have candlestick patterns, and we're using a daily chart. So I'm just going to go over all the trades since August. So this is a great practice tutorial. So let's start. Okay, the first one, most recent, 4 days ago. Notice the market had rallied. This is the pound Canadian dollar, rallied all the way up to 175. And then we had 3 days of indecision. These candlestick patterns are indecision. When you have 2 week, let's make this bigger, I think. It's a lot easier to see. So I'm looking for 3 reasons to take a trade. First, the candlestick reversal pattern is one. Number 2, stochastics needs to be above 80 or below 20. In this case, it's above 80. So these are reversal candlestick patterns. Not yet, but notice the market rallied for about 2 weeks and hit a previous resistance level from December 27th. So that's the first thing. I'm looking for support and resistance level. I'm looking for candlestick patterns at support and resistance, prior support and resistance. And notice 3 days, market was flat. There was no decision. No one is in control of the market for 3 days. Then what happened? The body of the candle, of this red candle, closed below the 3-day indecision. So 3 days of spinning tops, followed by a bearish candle closing below the 3 spinning tops, and that's your trade signal to sell. So I would sell on the next day, and notice the market just went 3 days. Notice the stochastics was overbought when price gave us this candlestick pattern. Okay, so that's a great trade signal, very classic reversal pattern where we have 3 days of indecision, and it's more like a breakout trade. Then one candle confirming that this run is over and we should be selling. And stochastics is confirming the overbought condition. Here's another one, another candlestick pattern. We have stochastics oversold, right? It's on a daily chart, so each of these candles is an entire day. We have market sold off about almost a week and a half. And then it created these 2 indecision candles, 2 dojis, okay, followed by a bullish, what is called a bullish engulfing candle. Notice that the body of this candle engulfs 1, 2, 3, 4 candles, 4 previous candles. So this run that started up here all the way down to here is over. Bulls take control, and notice the market comes back down. It always does this. It always will retest the lows before it rallies. Same thing when the market's overbought. It's going to retest the highs before it collapses. So you need to practice this, because if you, let's say you took this trade here and then you saw the market sell off, go against you, right? And you would be down 159 pips. And you're ready to exit this trade because you thought, oh, this is a bullish engulfing candle, I should be buying. But markets tend to retest support. Your stop loss would have to be all the way down here to protect yourself from getting taken out. And then, of course, from there, it went all the way up 450 pips. So that's about, on a standard account size, one lot, that's $4,630. Okay. All right, let's move along. Here's another one. Market rallied for 2 weeks. Stochastics again is overbought. Okay, stochastics is at 80. And then we have a bearish candle after a rally. It just turned around. So this three candle combination, not exactly an evening star, but close enough. And then the market just sold off for about 280 pips. The thing is, if you wait patiently, just wait till the market is overbought and oversold, just looking at stochastics indicator on a daily chart, all you need to do is wait for a candlestick pattern to confirm what you see in stochastics, and you should be okay, because once stochastics is oversold and overbought, it's very difficult on a daily chart to keep going. For example, here we had 3 days of indecision and the market is overbought, so and it's hitting a previous resistance level from a few weeks before. So it's really almost impossible. I shouldn't say impossible, but it's very difficult for the market to break this level of resistance when it's overbought on stochastics. So everyone is looking to sell at these levels. Okay. Here's another one. This is what is called, again, a bullish engulfing candle, where the market, again, stochastics is oversold right down around 20, and then this green candle engulfs the previous candle. That's a reversal candlestick pattern. And again, I need 3 reasons to take a trade. I need stochastics to be oversold. I need a reversal candlestick pattern. And I need for the next candle to close above this bullish engulfing candle. And it did. And look, this thing just shot up 580 pips. Okay. So this is what I do almost on a daily basis. And I turn this into a game. I just go back in history and see how many trade setups I can find. Usually the best ones appear at previous support or resistance levels. So here we had support, right? The support market would not penetrate this 166.38 area, and it rallied and it just came back down. Market has memory. You notice that it came back to the same place and it came back here. And each time that it hit a support, notice that stochastics indicator was oversold. See that? Came back down to support, stochastics is oversold. Here we had notice this T here, this is an indecision candle, and the next candle closed above. So that would be our buying trigger. Here, this is what is called railroad tracks. 2 candles equal in length, side by side, creates a railroad track, and that's another reversal candlestick pattern. Stochastic is oversold, and the market rallied for a week. Notice up here, we have the market rallying, right, for 5 days. Then we have this indecision candle. Okay, when you have an indecision candle, and stochastics is overbought, right? So that's 2 reasons to look for a selling opportunity. If this were a green candle and closed above this T, then that would be a continuation pattern and would keep rallying no matter, it doesn't matter if stochastics is overbought. The candlestick is more important. But this candle, what happened? It turned around and closed below this T. So we would be looking to sell. Okay? And there's your trade. It went down for an entire week. Here again is the bullish engulfing candle. Stochastic is not quite oversold, but it's not overbought either. Okay, so this bullish engulfing candle covered 1, 2, 3, 4, 5 candles, and then it just rallied. Okay. Here again is a hammer. Remember, the wick has to be twice as long as the body. Stochastics indicator is overbought, and that's my, excuse me a second here, I need to, here's stochastics is up at 80. A candlestick pattern, right, a reversal candlestick pattern. This rallied for about 2 weeks and then gave us this candlestick pattern, hammer, which is reversal. And then all I need is for a body of the candle to close below the hammer, and there it is. It took 2 days, but finally it broke below the hammer. I would sell on this candle, and look, this thing just shot down for about 3 weeks. Okay, this is why it's so powerful. 700 pips, $7,000 on a standard account in 2 weeks. Okay, that's why I love trading the daily chart, because you do not have to. You just wait for the right opportunity, the right candlestick pattern, qualify the trade, have 3 reasons to take a trade. As long as the stochastic is oversold and overbought on a daily chart, you have great opportunity to make a large sum of money just using candlestick patterns, stochastics, and confirming this candlestick. So remember, when you see a hammer, the candle, the next candle, has to close below the body of the candle for it to trigger a trade for you. All right? And I could do this all day, but this is a great exercise, because the more you practice, when you see this in live trading, then it's easier to trade. You will not second guess. You won't have any doubts about taking the trade. You already qualify the trade. You need 3 reasons. You need stochastics to be oversold or overbought. You need a candlestick pattern. In this case, we have a bullish engulfing candle. And the next candle did not close above, but we needed to wait for this candle. And it did, and it went up for about a week. Okay. So that's it for this tutorial. Again, if you have any questions, just email me. Have a good trading week, and I'll talk to you guys soon.